Welcome to today's webinar, the home of specialist finance. Today I'm very pleased to be joined by Michael Grant, Head of Sales at West One Loans, who shortly will take you through the West One proposition and how it can help out for specialist finance. But before we do that, a little bit about us. So who are Crystal Specialist Finance? We are a specialist distributor. We have over 80 lenders on panel across our 6 different business sectors, which includes both exclusive and semi-exclusive products and lenders. We are dedicated to the intermediary, including training, BDM visits, along with ongoing case management and case handling. And we're extremely proud and humbled this year to have won numerous awards. Most recently, as you can see there, the Mortgage Introducer Award for Bridging Broker of the Year, to go alongside our Best Specialist Distributor at the B&C Awards. Very proud to be awarded Best Specialist Partner from TMA. And then the 3 SFI awards there, the Specialist Finance Broker, Commercial Distributor and Commercial Broker of the Year. We are still family owned. We have over 200 years collective specialist finance experience. And our main priority and our main focus is to make specialist finance crystal clear. It's an area that we're very passionate about, it's an area we believe in, and it's an area that we think is underutilised by the majority of brokers. So hopefully, things like our webinar today will show you the opportunities available and can hopefully mean that we can all benefit from it. We're passionate about specialist finance. It's one of our key mantras within the office. You've placed your and your customers' trust in us, so it's up to us to make sure we deliver that. We believe in phone first, we believe in talking to you to provide updates. We don't just hide behind our technological systems. We know we're only as good as our last case, and we want you to send the next one. So it's up to us to support you throughout the life of that case and beyond. We don't stop when an offer is issued. We see that right the way through to completion and then beyond. Service means that we can find unique solutions for your customers, and our relationships mean that we've got lenders that no one else has. We can get deals done that other people may struggle with. We work quickly. We aim to get back to you and complete your case in as short a time as possible. We know time is money. We want to get that case funded. We provide you with updates on market trends. We provide webinars such as this one. We provide marketing material, podcasts, any kind of training event that we can do to ensure that you're one step ahead, that you know what's happening both in the market, in regards to regulation, and also from lenders and products. Specialist finance can appear daunting. We do it every day. We do more specialists than we do anything else. For us, it's our bread and butter. So therefore, it's up to us to assist you with your current case, but also then show you the opportunities and show you where you can find new ones from. Any fees charged will be discussed and agreed up front. We don't believe in hiding things or having any hidden surprises for your client at the end. And again, we're all human, so we know occasionally cases will hit problems. You could have a down valuation, there could be some credit, there could be an urgent timescale that's not been adhered to. So we proactively take action to resolve these issues. We'll provide alternative lenders where we have to, or unfortunately, if it's something we can't help with, then it's vital we come back to you as soon as possible, rather than dragging the case out and then eventually saying, oh, by the way, we can't assist. We're investing heavily in technology to make sure that whatever we do can be the most efficient and streamlined way possible, that we can give you the very best customer journey. And expertise, our people have more than 200 years experience in the industry. We don't do anything else. We know where our strengths are and we can deliver those for you. So specialist finance for us, as I mentioned earlier, is our bread and butter. So we understand how it works. We've done it long enough. We've seen the vast majority of scenarios before. So for us, it's about explaining the process, timescales, and what's required from both you and your client in order to get that deal completed as quickly as possible. You very commonly hear people say banks aren't lending or this lender isn't interested in lending. The market is huge at the moment. Bridging, for example, there are more lenders than I can ever remember sitting in the bridging space. So it's all about knowing which lender is the one to go to. And that's not just based on price, that's based on appetite, that's based on requirements, deadlines, the various nuances that apply to your customer. It's all about finding that right home for that client to get that case done quickly and efficiently. So for us, normal for us includes adverse credit or a low credit score, tight completion deadlines, overseas borrowers, unusual properties, and the other bits and pieces you can see on there. And it wouldn't be right unless we touched on Brexit, the elephant in the room in a lot of these conversations where it's not mentioned. We don't have a crystal ball, so none of us know what's going to happen, and there's a lot of uncertainty around. People don't know what to plan for, don't know what impact that will have, and obviously that has a negative impact on markets. House prices, daily at the moment there seems to be stories coming out saying house prices are stagnant, that property sales are falling. Again, is it the right time to sell? Is it the right time to buy? Who knows? And of course, there could be issues there with lender liquidity. Most of us can remember back to the dark days of 2007, 8, 9. Lenders seemed to be dropping out of the market. A lot of that was based on funding from other areas. So if investors feel that the UK property market is poor, will that impact on the liquidity available out there in the market? Then of course you've got the opportunities. You've got the strength of the pound. It's a great opportunity for foreign investors to buy in the UK. People still need somewhere to live, so people will be renting, people will be buying. It's just whether those transactions actually make sense. So taking the opportunities out of that, a reduction in house prices obviously means increased access to the market, which can provide opportunities there for bridging new residential and buy-to-let customers, or even commercial. So we're seeing at the moment a number of developers, for example, buy commercial stock, do a refurb on that and convert it into residential, which can then either be sold on or added to their investment portfolio. And for customers who don't think that sale or purchase is the right way, the right move, many of them want to improve, which opens up opportunities therefore in second charge lending, bridging finance, and across the refurb and development range. The 2018 survey showed that 51% of cases that they looked at could be classed as typical, and 49% could be classed as complex. So within that complex section, they've broken down a little bit more of what those sectors are. So adverse credit, self-employed, maybe the age of the customer, expat or foreign nationals, complex income, debt consolidation, and then various other factors that fit in there. So even if you don't consider yourself a specialist mortgage broker, you'll have dealt with a self-employed client, you'll have dealt with a client with some adverse credit, you'll have dealt with a client that's either borrowing into or getting close to their retirement age. So all of these things fit well within the remit of specialist finance. So customers today have more diverse needs. So if you're not considering specialist finance as a major part of your arsenal, then you really could be missing out on assisting a number of clients. So your high street lender typically doesn't assist clients with adverse credit or with CCJs, defaults, bankruptcy, where complex income situations exist, maybe a self-employed client or a client on contract, a client lacking relevant experience, expats, foreign nationals, or clients borrowing close or into their retirement age, so the later life borrowing piece. So with a little help from Crystal, we can help you with all of these types of clients. We can bring specialist finance back into your remit and help you write more business and assist more customers. The world's changed. Specialist finance now encroaches on standard finance in a lot of sectors. So when we're looking at residential, for example, where we step in, we don't do the traditional vanilla residential that you'll do yourself. You wouldn't care to use us for that. You're going to do that on your own. Where we can help is things like new builds, where you've got complex incomes, where we're looking at ex-local authorities, limited income proof, newly self-employed, contract workers, that kind of thing. So something a bit unusual. You can add to that things like adverse credit. We can add unusual construction. So basically anything that would knock that out of the Halifax, Virgin, Accord, platform type lenders, and that you need to look at something a little bit more unusual. When we're looking at buy-to-let, there's been a lot of talk recently about limited company landlords due to the stamp duty changes and the taxation implications that can have. So we're still doing a lot of limited company. We think we are very knowledgeable about that transition, about the incorporation piece and how you can move that from limited company into individuals. That said, we're not tax advisors, and we would always recommend that you and your client speak to a tax advisor before doing that, because what's right for one client isn't necessarily going to be right for the next one, and everyone has different circumstances, different requirements and different aims from doing that. So we work with a number of big accountancy firms who are experienced in that type of transaction, so we can put you in touch with them. They're more than happy to have conversations with clients about how it can be structured and what the implications of that will mean. Recently we've seen a portfolio of £22 million where the client's looking to incorporate, and the advice for that client was very different than a client who's looking to get involved in buy-to-let for the first time and wants to make sure that his plans are future-proof and that he's got the right succession and capital gains plans in place from there. Other areas on buy-to-let, student lets, DWPs, portfolios, HMOs, again, anything unusual property types, unusual scenarios. We do a lot of work with portfolio landlords. So again, some of the more vanilla buy-to-let lenders are more than happy where your client owns up to 4. It's when they earn over 4 that they can get a little bit twitchy, start asking a number of questions, require business plans and things like that, which the clients might not be used to providing. So again, speak to our team here. We've got many alternatives that we can use. We can even walk you through that process to get that deal placed. Probably what we're best known for is commercial finance, probably reflected in the awards that we saw at the start of the presentation. But for us, commercial, it can be everything from your traditional office unit, your factory, workshop, your retail unit, but right the way through to mixed use property. So one of the probably unforeseen effects of the tax changes to buy-to-let properties was the move into semi-commercial. It's something that we've been talking about for a while, and it's something that makes sense to a lot of buy-to-let investors. If you're used to renting out a flat and then you add a shop to that scenario with a 5, 10, 15 year lease in place bringing in income, that's not a huge leap for most investors. And then with that, because it's commercial income, it can be looked at differently. You've then got 2 income streams from the same unit. You've got various implications on stamp duty, etc. And we're seeing some very good returns for a number of our buy-to-let investors through their brokers on maybe venturing into that semi-commercial space that they wouldn't have looked at before. So that can, again, other property types there, residential above commercial. We've done a number of live-work units. We've done startup businesses. We can do a little bit of unsecured commercial finance, but that's not a huge market for us. For us, it's the property. It's about working with that either owner-occupier or investor in order to maximise their opportunities. And again, there's still a lot of interest there for expat borrowers looking to buy into that space. Second charge lending, again, something that MCD really kicked on, something that every good mortgage broker should be considering as part of the portfolio of products they're offering to their clients. Where you've got any client looking to raise money for any purpose, if they come to you with a remortgage and are looking to raise some additional capital for any of the reasons that you can see on there, you should be thinking secured loan as well. Weigh up the 2 options. Again, similar to the taxation change, what's right for one client isn't right for another, so it's really important that you take that into account and you do weigh up both options. If your client's got a really good first charge rate or is subject to additional penalties for leaving, then second charges can be a very useful addition. A number of the second charge products now come with no ERCs, which means that you can take a second charge for a relatively short period of time and then amalgamate it all into one when a fixed rate comes to an end. Where we're seeing these particularly useful at the moment is where clients have taken 5-year fixed and then realise partway through the loan that they need some additional money. So rather than breaking that fixed rate, paying anything up to 5% ERC to do that, you can take a secured loan. Rates on them are mid-3s for some borrowers. So it's certainly not an expensive option compared to where they used to be. And it is now something, as I say, that every good mortgage broker should be considering as part of their offering. Bridging finance is one of our favourite types of business. We really get bridging loans, we understand them, we see the benefits of them and how they work. And it's something that more and more brokers are coming on board with. Basically, a bridge is a short-term loan. It can be badged however it wants to. It's a loan for up to 18 months, secured on a property, and can be used for relatively any purpose. The most common ones, auction finance. If you're looking at a BMV transaction, there are still lenders that will look at that. Chain breaking is particularly big at the moment, where particularly in a flat purchase market, customers want to purchase the onward property before they've sold theirs. So you've got one property on the market, we can secure across one, the other, or both properties in order to maximise that opportunity for the client. Bridging rates are a world away from where they were 2 or 3 years ago. It's now something, again, that every broker should be considering as part of their arsenal. Development finance depends on your views on the economy and which article you believe on which day where this element of the market is, but this could range from a ground up build through to a conversion. We're doing a lot of conversion business at the minute where people are buying an asset and looking to add value to it. 12, 18 months ago, that was more about the HMO side of things, where people were buying a property and looking to convert to HMO. Now we're looking more towards multi-unit blocks or taking a derelict commercial unit or a vacant commercial unit and converting that into residential. Some really good opportunities there. It's a very bespoke area of the market, and it's something that you really need to be seeking specialist advice on, because there are so many lenders all doing different things, all with different appetites, and that appetite changes almost weekly. A lender that's amazing today lends a lot of money on one particular development type over the next couple of weeks, and the next month they don't want to do that anymore. So we've got a development team in-house, certainly worth speaking to them for any requirements that you're looking at there. So how does it work? Key for us is, as we touched on earlier, speed, service, flexibility. So contact us any way that's easier for you. We think it's really simple to deal with us. We basically try and make ourselves available however we can. So you can email us, you can go onto our portal and log in, go to our website, give us a telephone call, you can come and visit us at the office if you want to, or we're frequently out at industry events. We host our own events, we attend network events. Basically, we just try and get out there to as many people as we can to educate them into the benefits of specialist finance. So however you decide to contact us, the key thing is that we put you in touch with one of our new business team and we get to the bottom of what the deal is straight away. What are the problems? What are the quirks? What do you need out of it? How do we need this to work? As soon as we do that, we can identify the most competitive and relevant product that we have available and get those terms out to you. At that point, there's no credit searches done, there's no land rates, there's no footprints or anything like that on the client. It's purely a conversation between all of us as to what's available and whether that's of interest to the client. If it is, complete the application paperwork, get that back into us, and our processing team then step in, do the searches, make sure everything's as expected, and then start collecting the documentation. They then work with the lender in order to move that through the various stages. Again, they're different dependent on each lender, so some do a dip, some don't. Some go straight to valuation, some do approval and then val. So we'll work with you on all those different stages there, keeping you informed, telling you what we need off you and what we're doing at each stage. Key thing with us is we don't just stop there. Once the offer's issued and the customer signs that, then we'll even work with the solicitors in order to get that case fully completed. As I touched on at the start, our completion fees are capped. We only charge that when the loan completes. So for us, we don't see our job ending when the offer's issued. It's about actually then seeing that through to conclusion and getting that money into the client's bank account. So, specialist finance is on the rise. There's never been a better time to get involved and to call us. Industry seems to be changing almost weekly at the moment, with different legislation coming through, different changes to taxation, to requirements, different FCA investigations and research papers on what's happening. And on top of that, the customer requirements are changing, customer expectations are changing, customer demographics changing, which means that lenders are adapting to that. Any of you that were around when the PRA stepped in and added the additional checks on buy-to-lets for portfolio landlords will see lenders change the process almost overnight. So previously what was quite a simple buy-to-let transaction suddenly became much more convoluted, more documentation required, logging onto portals to add portfolios, again producing business plans to show what the customer's intentions are was all new to the market. So products are adapting, lenders are adapting to what's happening out there. Property types are changing, customer demands are changing, and process to submitting applications is constantly changing. So from where we're concerned, we stay on top of that. We host regular sessions where we're trying to educate and train people into what's happening, what's going to happen and what might happen. So use that resource, pick up the phone, speak to us and see how we can help you with those complex cases. And in doing so, we partner up with some really good firms. We ensure we constantly manage our lender panel to ensure that we are getting the level of service that we expect, that you want, and that we're delivering products that actually offer solutions. I'd like to introduce you now to Michael Grant, Head of Sales from West One Loans, who will take you through the second part of today's webinar. Over to you, Michael.
Welcome to West One, the home of specialist lending. My name's Michael Grant. I'm Head of Sales for the Bridging and Development Finance team here within the group. What I want to do today is talk about bridging loans made simple. For us, let's just get straight into it and tell you a bit about what we do and where we see ourselves. So, West One are able to lend on residential, commercial, semi-commercial properties, as well as land with and without planning. We lend nationwide, England, Scotland and Wales. We're fully authorised by the FCA, able to lend on a first and second charge basis on applicants' main residence as well. Able to link our bridging products to other areas of the business, for examples, buy-to-let, development finance, development exit, and second charges. So, simple, hassle-free lending. At West One, we believe that bridging finance should be made simple. We take into account three important factors. What's our security and value? what's the client situation, and ultimately, what's the exit strategy so that we can be repaid at the end. We regard ourselves as a lender that takes a proactive approach to lending and also ultimately want to make the right decisions commercially for the group. Bridging is an overview and the way we see it. We provide short-term loans, bridging finance, secured on residential and commercial properties across the UK. We offer loans ranging from 30,000 up to 10 million plus. We have multiple funding lines helping to support varied product offering. Our products include residential first and second charge loans up to 18 months, commercial first and second charge loans up to 18 months also, regulated bridging on a first and second charge basis up to 12 months. Our loans can also be serviced, retained. So for retaining on all regulated bridging loans, serviced can be, we can allow the client to service on unregulated transactions. Loans can also be structured with a short period of retained interest along with being serviced as well. So we have the flexibility to look at both. When and where will we lend? So properties that are currently occupied or will be occupied by the borrower or their immediate family, individuals, trusts, residential properties, farms and agricultural properties on a referral basis, HMOs, otherwise known as homes of multiple occupancy, land with and without planning on a referral basis, and as mentioned before, first and second charge securities can also be taken into account. Who can we lend to? So we can lend to private individuals, we can lend to limited companies, LLPs, offshore SPVs, pensions, trusts, and SIPs, notes up to 50% of the total net value of the client's assets. So we have a number of different options in terms of our client base, in terms of where we're able and who we're able to lend to. Question you may ask, what can we lend on? So we can lend on residential properties, investment properties, commercial properties, semi-commercial properties. So for example, you may have commercial use below and you may have flats above. Land with planning. So again, if we're looking at land with planning, the option here is potential look at development finance thereafter. Land without planning on a referral basis. And if we're lending on land without planning, essentially our appetite is probably around the 50% mark. Ultimately, with the option there to look at gaining planning, perhaps maybe to develop out or maybe to sell on to a developer within their space. HMOs, farms and agricultural properties, again on a referral basis, and development opportunities that may be taken up by the client. When would you consider using West One? So the key points here, mortgage delays is probably one of the most common reasons for using a bridging finance. Again, a key example of that is where you have someone who's looking to purchase a property, however, they're waiting to sell their property before they can purchase their dream home. Very, very simple and probably the most effective reason for using bridging finance. Light and heavy refurbishment projects where the security may not be currently mortgageable. We see quite a lot of this within the marketplace with the option then to obviously take a bridge while the works are being carried out, allowing the client to refinance at a later date once the works have been completed. Purchasing properties undervalued to sell on for a profit. Again, there's quite a lot of this within the marketplace. So for whatever reason, it could be a case that a client is buying a property that requires work and they've undertaken to do the works and therefore have agreed to purchase below market value. In this situation, we can lend no problems at all. Ultimately, what we'd look at is we'd ultimately look at lending on the purchase price. However, we can actually increase our leverage depending on the reason behind the undervalued transaction. So key examples of where we would sit, we're likely to potentially go up to 85% of purchase price, provided we don't exceed 70% of value. Again, just with the understanding of the transaction in order to do so. Downsizing, a client may be looking to downsize, maybe have a large security that they own no longer required and therefore looking to downsize. That will be another reason as to why someone may bridge. Again, upsizing or relocation, very similar scenario, but obviously the other way around. Auction purchase is quite another common reason for taking out bridging finance. Again, as you may be aware, if you're taking out an auction purchase, you have a restricted time frame in order to complete a transaction. In most circumstances, you have 28 days from the time that you actually purchase the property at auction. Now, very difficult to obtain a mortgage within that period of time. So the likelihood is that you would look at taking a bridge, allowing you the time to refinance later on down the line. Again, exit development finance is another reason for taking a bridge. So you may have a development that you've recently completed, and therefore the development facility will need to be repaid, giving you time to either sell the units or look at refinancing onto a longer term product. Again, that's something that we can look at here at West One. Lease extensions. You may be looking to purchase a property with a short lease. We are happy to potentially lend on properties with short leases, taking into account the fact of the property in its current condition with the short lease, with a view to extending the lease and then refinancing later on onto a conventional mortgage. Obtaining planning permission. Again, it could be a land purchase where planning permission will need to be submitted. Therefore, taking a bridge will allow the client time to obviously put in their plans for planning and then look at refinancing again, either onto development finance or looking to sell with the aid of planning. And development projects. So again, goes back to perhaps light or heavy refurb projects that clients may be looking at. HMOs, conversions of office blocks to residential, again, under permitted development. That's another reason why you potentially may use bridging finance. Now, one of the key areas for us in terms of bridging is understanding that a client will always have a viable exit strategy. Very important in bridging. Ultimately, we need to understand, yes, it's easy for us to potentially lend the client money, but ultimately we need to make sure that we can be repaid at the end. Each client must have a plan in terms to exit or repay back the loan. This is known as our exit route. A viable exit route must be on all bridging and loan applications, whether it's regulated or unregulated. This is important, just as important as the client status, property, valuation, and loan to value. Refinance. Now, this could be refinance for our security or another UK security that the client owns. This would need to be evidenced based on the client's current financial position. Sale of property. This could be the sale of our security, or again, could be the sale of another UK-based security that the client owns. And again, this would need to be evidenced. Equity release is another form of an exit that we're prepared to take. So again, we just need to understand that the client is able to raise enough in order to repay back our facility. Inheritance with evidence, and this will need to be verified by the lawyers. We can use inheritance to obviously repay back a bridging loan. Investments that the clients may own. So there may be investments in the background that are coming to maturity and therefore is enough to repay back our bridging facility. Pensions. So clients may have private pensions that they can obviously use in order to repay back our bridging loans. All of these are viable exit routes in order for us to allow a bridging facility for our clients. Key product features. So, as we mentioned, available across England, Scotland and Wales. Interest is retained in full. Adverse credit can be considered on a case-by-case basis. Again, we look at it on a referral, depending on the scenario situation. So every case is worth having a conversation. Highly competitive introducer fees paid within 3 days of loan completion. Attractive commission rates, typically around 1% of the loan amount, there or thereabouts. No exit fees, no early redemption charges. So all these are key product features which I think are important for a client to make sure that they're getting the best possible service and products from West One. As we mentioned, England, Scotland and Wales. However, Scotland unregulated and mainland only within 20 to 25 miles of major city centres. Loans available, as mentioned, from 30,000 up to 10 million plus. Loan to values achievable up to 75%. Terms available from 1 to 18 months on unregulated bridging deals and 1 to 12 months on regulated deals. We have a minimum property value that we have to adhere to, which is £150,000. Please note that we can consider lower values if we're lending across a portfolio of properties, again on a case-by-case basis. We are able to cross-charge allowed across multiple properties. This can be done in order to achieve potential 100% funding on acquisition of properties, or again, just looking to refinance from existing debt that the client may have. As we mentioned, no early redemption charges or exit fees in our bridging finance product ranges. And applicants' ages range from 18 to 75, though we will consider older applicants over the age of 75, again on a referral basis. Multiple applicants allowed on our application. So again, you may have a situation where there are more than 2 applicants on one single property. We lend based on the 180-day valuation figure. So just to break that down, on a valuation report, you potentially have 3 different figures. You have an OMV, which is an on-market value. You have a 90-day valuation figure, and you have a 180-day. The 90-day essentially is the figure that you would have if you have to sell the property within 3 months of it going on the market. 180-day, 6 months, and an on-market value if you were to sell the property at any given time. We use the 180-day valuation figure. Undervalued transactions, as we mentioned earlier, can be considered up to 85% of the original purchase price, providing it doesn't exceed 70% of the open market value for residential and 70% for commercial also. General exclusions in terms of our property types: petrol stations, active nursing homes, care homes, trading pubs, nightclubs, place of worship, sports grounds. All other securities can be considered, and therefore we look at it on a case-by-case basis. In terms of solicitors, so our solicitors do not ask for an undertaking, meaning that they only get paid on application when it actually completes, which greatly speeds up the process for us on completion. There are certain circumstances where we would ask for an undertaking depending on the loan size and if we're lending to offshore structures. So the process from application to completion. Below are the key steps of successfully completing a bridging loan with West One. A simple inquiry form can be filled in or email detailing the client's requirements. Once we have that, we can able to assess the situation with our internal sales team and our BDMs. Once we can send out heads of terms or a term sheet, what we would require from the client is a signed application form along with identification and proof of address. We can accept emailed copies, we can accept fax copies, we can accept hard copies in order for us to start the process. Once we have this in, the file will be created by our admin team, where a dedicated underwriter will be assigned to your case. The key focus for us day one in starting the legal process and the valuation process. Again, this allows us a speed of transaction in order to move things forward, and again, gains commitment from the client at the same time. The underwriters, once underwriters have gone through the file, they'll provide you with a shopping list of requirements, followed up by a call to their broker in order to go through the list of requirements that are needed in order to get the case completed. We expect a valuation report back with us within 3 to 5 working days, which falls within our standard turnaround times. Once we have that, ultimately the facility letters and legal documents will be drafted and sent over to the client solicitors for them to go in and sign the documentation. From this point, all legal docs will be reviewed. We can then receive a report and title. Risk review will be finalised before we can go ahead and look at completing the case. The file will then be signed off, and then we can release funds to the lawyers. So very, very simple process, and ultimately, if followed, we can look at completing cases relatively quickly. I guess at the end of the day, it's down to the motivation of the clients, plus obviously the work that's put in from the underwriters and the lawyers at the same time. So why work with West One? As mentioned, we're authorised and regulated by the FCA for certain loans made to consumers. We have a comprehensive product range. We consider large loans over £10 million. Complex and credit impaired loans can also be considered. Fast completion times which are well below industry standards, and lending on a wide variety of properties. Multiple funding lines to support your varied product offering. So again, it goes back to the type of lending that we do, i.e. regulated, unregulated, commercial, semi-commercial, land with and without planning. Wide range of financial products within the group at West One. So West One gives the broker, the client, a vast financial options from acquisition onwards. So for example, if the client may have land with or without planning, with a bridge, we can allow the client to purchase, obtain planning permission or rework. This can then lead to other areas of funding within the business. Development finance, for example. Remember, there are many options to easily allow us to cross over products such as development exit, or even via our buy-to-let refinance route. West One has all bases covered: bridging loans, buy-to-let, development finance, second charge mortgages. From us here at West One, I hope you enjoyed our little presentation. This gives you a feel for where we are and what we're currently doing, and we look forward to working with you all.
Thank you for that, Michael. I hope you all found that as interesting as we did. So all that's left for me to do now is to wrap up. I'd like to take this opportunity to thank you all for participating in this webinar, but also to those of you that have taken part and participated in our webinar series for the whole of 2019. It's been a very up and down year for the industry. It's been a very difficult year, very turbulent year with various different things going on, but hopefully it's been a very successful one for you, as it certainly has for us. So again, thank you very much for your support for 2019. I hope you will continue to join us for our series of educational materials throughout 2020, which will include a brand new series of webinars, a new revamp of Crystalcast, and various other incentives and opportunities that we'll make available to you throughout the year. Thank you again. Very Merry Christmas to you. Have a great new year, and hopefully see you soon.